In today's video, I'm going to prepare you to trade Tesla after they release Q1 delivery numbers. So stick around. Okay, so I just wanted to do a quick video on Tesla. Basically, what we're looking at is Q1 deliveries reporting to tomorrow, Thursday, or Friday. And I think the expectations have come way down. If we take a look at the chart, what we can see is just looking at the 30-minute, going back over the last month or so, since the beginning of the sell-off, in late February, Tesla was actually an $800 stock. It had sold off to below 700, bounced, and then trended down with most of the market. It actually accelerated to the downside from, I guess, mid-March from around 600 before bottoming in mid-300s. Had a really nice bounce back up to 550. And in the week since then until today, really being accumulated just above $500 a share, and actually was quite strong yesterday, even with the market selling off. Now, more and more estimates are coming out. The numbers are coming down. I think right now we're looking at probably 80,000 Q1 delivery is kind of right around where the consensus is. And that's important for kind of the psychology. But if we look at the chart, and I'm looking at the 30-minute right now, what we can see is most of the trading that's been done in the last week has been between 500 and 535, let's call it. It's peaked its head above 535 a few times. It looked like people were positioning themselves long going into the Q1 delivery number. And today, I just think there is some more flow in the last 24 hours, people talking about 70,000 deliveries. A very popular YouTube person who covers Tesla even said 65,000. So I really think 80,000 is the number to use in terms of expectations. And if we see the number come in above there, especially today where it's looking like it's going to close well below $500 a share, I think there could be some significant upside back up to the kind of the top of the range from the last 3 or 4 days. Now, if somehow they're able to come out with a 90,000 car delivery number, I have no idea how they can do that since they basically shut their factory down on March 23rd. People have potentially canceled deliveries, both in the US, North America, and Europe. Unless things have just gone completely gangbusters in China, because China is back up to normal, I don't see there being really much of a chance at 90. But if you see 90K delivery number, the stock pretty much is going to be a buy no matter where it's trading when that number comes out. And the upside would probably be right back to $600 a share where the sell-off started from in mid-March. Now on the downside, it gets a little bit trickier, right? Because it's already put in that low with the market a few weeks ago or 2 weeks ago in the mid 300s. I'm not expecting a retest there. If the number comes in, let's say 75,000, somewhere in the mid 70s, I could definitely see it selling off a little bit to 450 to 470, something like that. I do have a long position. I did sell some more puts today, some 420s going out a few weeks to when the earnings call is going to happen. I'd be very happy to be long more shares. I'm basically effectively at 400. I have some calls. I have a lot of various strikes and calls, 580s, I think 570s, maybe even some 600s. And that's bigger picture, like kind of longer term. But in terms of, just trading it on the announcement and trading it for the day after, I think it's going to be, if they beat that kind of 80,000 threshold that's come down, the expectations from, at the beginning of the quarter at 100, then it came down to 90. I think that's where everyone is right now, is right around 80. If you beat that number and the stock is, trading below 500, you're gonna see some upside there. And by how much they beat that 80 by, that's going to determine how strong it is. I did a video about a month ago where I talked about buying the next great pullback. I obviously wasn't anticipating the global economy coming to a halt, other car manufacturers having to go into their credit lines, potentially facing bankruptcy again, I guess. Tesla is the best positioned of all the car manufacturers globally in terms of cash position. They raised $2.3 billion last quarter. Coming into this announcement, they were probably somewhere between $8.5 billion in cash, plus lines of credit gives them access maybe up to close to $10 billion. So they can weather a weak Q2. And I think people are looking at the guidance as well. If they bring their guidance down to 450 to 500,000 this year, the low end of that guidance would be around a 25% growth rate for 2020, where most of your major car manufacturers are going to collapse in terms of demand. So I think that would be another huge thing for them. I think the market would actually like for them to bring down the guidance. And because if they can bring down the guidance and give a lower part of the range, which still kind of pins them towards strong growth, I think that also will be counterintuitive. You'll see some headlines from the financial press. Wow, Tesla lowers guidance and rallies or something like that. I think what could hurt them in terms of guidance would be actually no adjustment, even though that would be an attempt at a show of confidence. I think that's unrealistic. And I think the other thing that could hurt them on the guidance is if they just brought it way down to in line with what the numbers they did last year. And so I think that's where we are. I certainly will give more updates as the numbers come out and I see levels develop.